It's probably been the single biggest issue over the last 12 months, or the last 18 months, in fact. And I think it is a huge threat to the global economy. If you look at business surveys in the US, the ISM index for one, they were sort of doing fine up until the middle of last year, and then when the trade war really escalated around June, they took a turn for the worst. I think US companies were on track for very strong CapEx business investment through last year, and then of course around that point again that took a turn for the worst. So I think it's a huge issue. It's a huge issue in terms of business confidence. In terms of the real economic impact so far beyond confidence, it's minor, but if it continues, if the issue is not resolved, then I think it's potentially a major threat to the global economy. And that's evident in the fact that you have seen those negative business reactions. Basically, companies are thrown into disarray. You have a supply chain these days which is based on receiving goods from all around the world, feeding into your production chain. Suddenly, when you don't know whether you can get those goods from a particular country or whether they'll be subject to a tariff which makes them uncompetitive, you might have to resource somewhere else. That results in a lot of confusion, and also a lot of confusion as to where to locate investment. So I think it is very important that this issue is resolved positively. I think ultimately it will be, but I am getting a little bit worried that it's going to take even longer, which could cause more volatility in financial markets in the short term.
That certainly is a concern, that we are going to see some more volatility in financial markets. However, the overall feeling that I'm getting at the moment is with an interest rate cut from the Federal Reserve, things are going to be positive going forward into the new year, and you certainly seem to be positioned for that as well. What is your strongest conviction trade, Shane, at the moment, given that optimistic view?
Yeah, I must admit our positions aren't that big. We're not running large positions at present, but we do have that growth bias. Probably our biggest single trade would be that equity markets will do well on a 6 to 12 month horizon. But we find it difficult to sort of characterise which markets will do best. But if any, I'd have a bias to it would be the emerging world. The emerging world, particularly Asia, I think will benefit immensely as global growth picks up over the next 12 months, if, assuming we're right and there is sort of some sort of trade deal. This combination of lower interest rates around the world, including in Asia, or monetary easing, if not necessarily lower interest rates in the case of China, combined with a pickup in growth, some abatement of those trade concerns, and at the same time, some letting up of the upwards pressure in the value of the US dollar, I think will be very positive for Asian emerging markets. The rise in the US dollar has been a concern, but if it starts to head downwards, then I think that will alleviate a lot of those concerns around debt and debt servicing in Asian countries. So that would, if I was thinking about what's our single biggest position that I have confidence in on the next 12 months, it's probably that the emerging markets will do quite well.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.